Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and I am standing here on the rocks of Lake Coeur d'Alene in northern Idaho. And I really wanted to give you this backdrop for today's stock market update for the week beginning September 30th, 2019. I want to begin, though, like I always do, with my favorite quote of the week. This week's quote is from Mark Twain. It's one of my favorites. He once said, "The two best days of your life are the day you were born and the day you find out why." And those are some very wise words from Mark Twain. Jumping into the markets, though, I am getting that cautionary feeling. I think we're just about ready to begin another big decline in the stock market. But I want you to know that that is not a bad thing, as long as your investments are protected during the process. Stock market declines are one of the best opportunities in your lifetime to buy things cheap. But most financial advisors and most investment companies do not tell you to protect your investments at the highs. A few days and weeks ago, the stock market, as measured by the S&P 500, hit an all-time record high, and now we're starting to roll down again. I wanted to mention that currently the valuation of the stock market companies, also known as the market cap of the U.S. stock market, is now 44% larger than the entire U.S. economy. And in my opinion, that is not a very healthy situation. That is very, very overpriced and dangerous, in my opinion. Here is a chart that I've showed many times over the last year from John Hussman. And as you can see in this chart, we are now more overvalued from a stock price to earnings and profit standpoint than we have ever been in recorded history. We are higher than 1928, and we are higher than we were in 2000, and we are wildly higher than we were in 2007 and 2008. So with that said, I just say that I would like to recommend caution. I will go through and show you technically why I recommend that, and if I can be of service, please let me know. Be happy to talk with you via video conference or just simply buy you a cup of coffee and talk one-on-one. So here is the chart for the Dow Jones Industrial Average, then the S&P 500 and the NASDAQ, and I've got one more in there as a surprise. So let's get started with that Dow Jones. Okay, this is a chart of the Dow Jones Industrial Average over the last couple years, and you can see that it has been quite the roller coaster ride. And the one thing I wanted to point out is that the price action is not random here. There is a pattern, and it is mostly in the area of these highs up here, and that is an area of resistance. Let me draw in the resistance line, beginning with just indicating those highs first. If we draw a line from this high from January 2018 to this high of October 2018 and this high up here from July 2019, you'll see that it lines up perfectly from here to the top of that, and you draw and connect it just like that, and you can see that the stock market rallied up in June and July and hit that line about 5 times and then rolled over to the downside, tried one more time to get up there, and unfortunately it made a lower high. It wasn't able to succeed to get back up to that red line. It made what we call a lower high and started to roll over again to the downside, which is an indication that this index has gotten weaker since July, and that is not a good sign for investors who think this market will go up. So we have another low down here. I'll go ahead and connect these lows because this is potentially where we're going. From here to here, there is a good chance that the Dow Jones will go from about 26,820 down to touch that lower line at about, say, just below 26,000. That'd be probably about 1,000-point drop for the Dow, which would not make investors feel very good in the next few weeks. So we shall see what happens. In addition to that, we have lost support since Christmas. If you draw a line from this low of Christmas Eve to this low of June 1st, 2019, and you project that forward, this was a rising bottoms support line, meaning the market kept bouncing off of that until August, the first week of August 2019. We broke it, tried several times in a panic to get back up there, failed every single time until September. We popped our head back up to try and make another high in the Dow, and it failed, and now we're right back below that. So support has failed, and I already told you about the other lines, and that opens the door up for maybe a 1,000-point drop or more in the Dow. Two other warning signs that I'd like to point out on the Dow Jones Industrial Average are down here at the bottom, and we have the price momentum oscillator and the relative strength indicator down here. And why that is important is because we have the strength of the price movement of the Dow since the end of February has been going from here to here, and now we're going down to here. So the strength of the price is getting weaker as we're going farther out in time since the end of February. So price momentum is falling, even though the price of the Dow is going from here to here, and we've got a divergence in the Dow Jones. Price is going higher, but the momentum is getting weaker, and that is a bearish or not a very good sign for people who think this is going higher. Also, we have the relative strength indicator, which has gone from here, is going in this direction since July, and that shows us that relative strength or strength is getting weaker as well. So price momentum, relative strength, both getting weaker, and the price has yet to confirm that, but I think it's only a matter of time. Here is a chart of the S&P 500 stock index, and very similar to the Dow, been quite a roller coaster ride. Just like the Dow, this has not been a random price movement. We had this high from January. If you connect that, January 2018, and you connect that to the highs of 2018 over here from the end of September, and you project that forward, you will see that the stock market, the S&P 500, rallied up perfectly since Christmas and tagged that line almost to the penny, and then rolled over and has since made, just like the Dow, has made a lower high here, which is not a good sign, and is now starting to roll over to the downside. In addition to that, if you connect the line from the bottom from Christmas down here, let me draw that line in, just like that, connect it to June 1st, 2019, and project that forward. Well, you can see that over the last few weeks, we rallied up since August, touched that line within just a few pennies, failed, tried again, and failed even worse, and we're starting to gain some momentum to the downside. So we have a failure of the support line since Christmas, going to June 1st. That's gone. There's no more support here, and we can't get above that January 2018 until July 2019 line. It's holding, and now the next line is this one right here, somewhere in there. So there's a good chance that we'll come back down and touch that. So I don't see a whole lot of opportunity to go any higher, but I see a tremendous amount of opportunity to go lower. Let me touch on that just like I did for the Dow Jones. Just like the Dow, we have the price momentum right here, getting lower and weaker since the end of February. We went down to July on that momentum, and then now since July we've gotten even weaker. So momentum is fading as the stock market is playing at all-time highs. That's a cautionary indicator. And then we also have relative strength going from here down to here. Strength is fading too since July, even though we're still playing around at the highs. So caution here on the S&P based on this. And I've got one more piece of information for people who don't know much about technical analysis. This is also a chart of the S&P 500, but it goes back to 1994 using investing.com's chart platform. And one of the most concerning things to me regarding the S&P 500 is the fact that if you put what we call in the technical analysis business the Fibonacci retracement lines on this chart, it looks somewhat like this. You put the 0 line down here at the very low of the S&P 500 in 2009, and you put the high, well, not the high, but you put the 100% mark right at the high here of 2015 before the spring and summer before Trump's election. You will see that since Trump's election, the S&P 500 has rallied up and has perfectly touched the 1.618% retracement line almost to the penny. And I'm not going to explain that in this video, but that is an extremely powerful level of resistance for the S&P 500. And I personally and professionally don't think we're going to get back above that. I don't think we can get any higher than that. So that is a concern. And then I got one last thing here. This is the S&P 500 since Christmas 2014. And all I wanted to show you is what this could potentially be. And that is a bearish expanding triangle formation. If you connect that high from January 2018 to the September-October high 2018 and go out to there. Let me make that just a little bigger. Change the color. Then you do the exact same thing, but down here on this low of February 2018 to this low of December 2018 and project that forward. What I'm getting at is if this is a bearish or not good or negative indicator for the market, there is the possibility that the S&P 500 could come all the way down and tag that lower line. And that would be, let's just do the math here, about 2,100 points on the S&P. Let's do the math. We're currently at 2961 minus 2,100. 861 points divided by 2,961. That would be a 29%, let's just say a 30% drop in the S&P 500 if we get all the way down to that bottom red line. That would not make investors feel good. So having gone over the Dow and S&P like that in such detail, I'm going to skip the NASDAQ 100 to save on time. But there's one just quick chart that I'll show you, and then we'll sign off. This is my favorite stock index. This is the Value Line Geometric Composite Stock Index. It's about 1,650 US stocks, equally weighted, no favoritism. The Dow Jones gives you a bigger piece of the pie if you are a larger stock price. It doesn't make any sense whatsoever to give a stock a larger piece of the index just because they have a higher stock price. For that reason, the Dow Jones is my least favorite stock index. The S&P 500 is weighted more in your favor, giving you a bigger percentage of the index if you are a larger company. If you weight the broad stock market evenly, regardless of size and stock price, you get the Value Line Geometric Composite. So this chart shows you the broad stock market without giving favoritism to any one stock or any group of stocks. Since August of 2018, you can see the broad stock market has been going lower. That is a problem. We had the high in August, followed by another high here, or our first lower high, major lower high, and looks like February 2019, another lower high here in April, and then another lower high in July, and then another lower high in September. If you draw a line across these right here, you will see that it's holding pretty strong, and that the broad stock market has been getting weaker since August if you take out all of the massive weighting toward the top 10 or 20 companies in the United States and weight them equally. This is a concerning chart, should not be discredited or pushed aside or disregarded. It is a very powerful chart and says that the broad market is not strong. Thank you again for watching my video this week. I hope you found the information useful. Like I said, if I can be of service, my number is on this page and also at the end of the video. So let's go ahead and wrap up with two of my favorite quotes. One from Lance Roberts. He likes to say, getting back to even is not an investment strategy. What he means by that is you cannot just buy and hold as the stock market's going through a significant decline. You need to protect at the top so you have money to buy at the bottom, because if you don't, you'll spend years just trying to get back to even. And my other favorite quote is, the best way to make money is to not lose it in the first place. So before you go, please like or subscribe to this Facebook, LinkedIn, Twitter, or YouTube channel. And again, please give me a call if I can be of help. Have a great day. Thanks for watching.